Hello, I'm Peter Herbert and welcome to the short session, Accounting Hot Topics for 2024. As another accounting year really starts to kick in, we thought it would be useful to give you an overview of the key things to look out for from a financial reporting point of view in 2024. These will, of course, all be developed in more detail during our longer courses this year. Okay, so topic 1 of 5 to mention is that we have got 4 FREDs, Financial Reporting Exposure Drafts. These, of course, are exposure drafts issued by the Financial Reporting Council, which do eventually inform changes to FRS. So always important to be aware of what the FREDs are to get a sense of the FRS changes coming down the line when these become definitive. The first one to mention is FRED 82, which of course has had lots of coverage on our courses in the last couple of years. This deals with a periodic review of FRS 102, which will be a substantive change. What you may recall here is that the FRC made clear in the later part of last year that the periodic review will not take effect now until at the earliest periods commencing 1 Jan 26. Remember, the main changes here affect accounting for leases in the books of the lessee, where many leases that were perhaps previously operating leases and off balance sheet will come on, and also a move towards the IFRS 5-step model for recognizing revenue from contracts with customers. Now, we will see the definitive standard issued in the first half of 2024, we're led to believe, but as I say, it won't come into play until periods commencing 1 Jan 26 at the latest, and therefore, although it's very much one to look out for, the implementation date is later than we originally had anticipated. Now, there are some other FREDs knocking around, FREDs 83, 84, 85 at the time of recording this session. Now, FREDs 84 and 85, very low impact. FRED 83, perhaps worth a very brief mention. This is all about the accounting implications of Pillar 2 tax reform. Now, Pillar 2 tax reform ensures that when you're operating a global business, you're paying a minimum amount of tax in the individual jurisdictions within which you operate. What FRED 83 actually is doing is embracing the accounting implications of that regime coming into play. And the FRED 83 amendments have now been absorbed within FRS 102. Key thing to mention, probably 2 points really. First of all, Pillar 2 tax reform will only be relevant for a global business with revenue of more than 750 million euro equivalent. And for many of the firms and companies that we work with, they're nowhere near that big. Also, I think importantly, what the changes to FRS are saying here is that when you think about perhaps the accounting implications of Pillar 2 tax reform and perhaps providing for deferred tax in relation to additional tax that will be payable, what the revision to the FRS is saying is hold back on doing that now until we get better sight of what this reform will look like in the times to come. So worth a mention, but I think in terms of immediate impact, somewhat limited really for many of the organizations that we work with. Okay, topic 2, SORP exposure drafts. As we've mentioned, the periodic review of FRS 102 will give rise to substantive changes. And of course, when you get substantive changes to FRSs, there'll need to be an evolution of the related SORPs in the specialist sectors, so pension schemes, LLPs, charities, housing associations, to reflect those FRS changes, and we can expect those exposure draft SORPs later in 2024 once the definitive FRS 102 has been published. So something else I suppose to look forward to if you are working within that space. Perhaps worth a brief mention of the charity SORP particularly. That is one I suppose that most people that we work with or would tend to have some interest in. And yeah, what the Charity SORP Committee have made really clear is the draft will not be released until the revised FRS 102 is released, and we therefore expect the SORP to be issued in exposure draft format in the second half of 2024. There will be then a minimum 12-week consultation until that becomes definitive. So again, one to look out for certainly moving into the second half of this coming year or this year. Yeah, the place to go for more information on the Charity SORP development is the Charity SORP Committee website, or charitysorp.org, www.charitysorp.org. You can see on that website the minutes reflecting the ruminations and discussions of the Charity Sort Committee. Yeah, those are there, but the last set I've seen is dated March 23. So there's not lots of really up-to-date stuff there. We do need to really sort of watch this space on the SORB and see how it takes shape, certainly in the second half of this year. Okay, third topic, ECCTA. This, I think, is a set of initials we'll become very familiar with during the course of 2024. So the Economic Crime and Corporate Transparency Act 2023, which will be implemented in detail in 2024. And again, a topic we did cover in quite a bit of detail all the way through last year. So it's been a long and winding road, really, to the Economic Crime and Corporate Transparency Act being published. It received royal assent back in October of last year. And a lot of it's to do with Companies House reform, really giving Companies House more power, I suppose, to take steps to ensure that the information on the public record, has integrity, is fit for purpose, and powers to remove and change information if it doesn't really, fit the bill as far as quality of information is concerned. Now, there are a whole bunch of different aspects of the Economic Crime and Corporate Transparency Act. One of the things you may remember us talking about a lot in the later part of last year was that we weren't really clear on the time scale, for a lot of this sort of stuff coming in. At the time of recording this session in February 2024, we're still none the wiser, really, in terms of the timescales for some of the really interesting bits that are relevant to firms of accountants and their clients. There are some bits that have been dribbling in from January, and more bits coming in from March 2024. But the bits that I think we're really interested in probably we're still a little bit none the wiser about the timescales. The one I suppose that people are really interested to talk about on courses tends to be the changes around the filing obligations for small and micro entities. And you might remember here that the key thing is that small and micros will be required to file at Companies House now their full accounts, including the P&L, in a way that all over the years, really, they've not had to do. So one we really need to keep an eye on in terms of the timescale for that particular change in filing obligations coming in. One slight chink of light, I think, in the final version of the legislation here was section 468A. And what that said was the registrar will have the power, even though small and micros will need to file their full accounts, including the profit and loss account, to not mandate that the profit and loss account is basically put on the public record for general, review and inspection by the public. So it might be that although those P&L accounts are being filed, they're not published on the public record. That's, again, a very interesting one to keep an eye on and see how that takes shape, certainly, as this becomes definitive through secondary legislation at some point during 2024. Fourth topic, which I think is one that will keep us all very focused during the course of 2024, will be increased company size limits. That's our basic slide where we summarize the size limits for micro, small, and medium. The one we always get lots of questions on, I find, tends to be the rules around the small company limits, because, of course, if you're small, you can apply Section 1A of FRS 102. If you're medium, you can't. And possibly more importantly, if you're small, you're generally going to be able to take advantage of audit exemption, where if you're medium, you can't. Now, there are changes afoot within the European Union, where, in that particular part of the world, we've got increases in those limits by as much as 25% kicking in this year, all really reflecting the fact that in an inflationary environment, it makes sense, the European Union feels, to increase the limits. There are consultations going on in the UK around that as well. We can, I think, expect to see an increase. These limits, remember, have remained the same for many a long year, and we might well along the way expect to see potentially increases to the audit limits for charities as well. Currently, of course, stuck at 1 million in England and Wales and 500,000 in Scotland. So whether you're working within the charitable sector, whether you're working in the for-profit sector, very much one to keep an eye on. I think there probably will be change here, but what the change will be and when it would kick in remains to be seen. Keep an eye on that, certainly, during 2024. The final thing to mention is just being aware of some of the useful sources of information in terms of what organizations can do to improve the quality of their corporate reports, their financial statements, annual reports. And the Financial Reporting Council does provide some really good feedback. I think what we often get a bit of pushback on this in terms of saying, well, the FRC's feedback on quality of financial information is probably more relevant to larger listed companies that are applying IFRS. And that, I think, is publications coming out of the FRC very much more orientated towards IFRS accounts. The points they make within those documents can be really relevant to private companies applying IFRS 102 as well. The publication in the later part of last year, which I just commend to you really, is the annual review of corporate reporting issued by the FRC. A link to it there on that slide, which runs through from their side, I suppose, the areas that they feel corporates most often don't really embrace to the required standard in terms of their annual reports. And the one that I think we're focusing on a lot currently, both from a corporate reporting and from an audit point of view, is cash flow statements. I do think cash flows really are, to a degree, the forgotten statement. And we do find, certainly if we're looking at accounts, looking at audit files, there are often quite a lot of errors within the cash flow statement. The two that I would say I most commonly pick up on would probably be poor labeling of cash flows, which could be described in a more clear way. But also I would say the really common one for me is situations where you've got what I would call non-cash items that are appearing in the cash flow statement. So classically, if you've got a newly incepted finance lease, the double entry would be debit fixed assets, credit finance lease creditor at the point of inception. There's no cash flow there, but what the cash flow statement will do, it will show a loan financing injection coming in and a capital expenditure amount paid away in the main body of the cash flow. Now, I know that nets to nil, but rather than grossing it up, it should be netted down, because in that sense, there's no physical money changing hands. Another one which I think is quite common is maybe discrepancies between the cash flows that you can see flowing through the cash flow statements and the related movements within the net debt note to the cash flow. Those, again, sometimes are statements which don't always completely marry up and can be inconsistent. So that's a really key one for me. And as I say, from the point of view of UK GAAP compared to IFRS, the rules are very similar. And so those corporate reporting review documents available for all to access, a very good point of reference there for anyone wanting to get better quality accounts and seeing the areas where sometimes things don't go right. Okay, so there'll be a very quick overview of some of the things to look out for. As I said, we will be covering those in much more detail during our courses in 2024. You can see our full 2024 program at www.insight-training.co.uk. And if you want to drop us an email about any of the content of this particular session, please do so. Inquiries@insight-training.co.uk. Thanks for listening. I'll see you all soon.